You know, when a stock has one of those truly catastrophic days, it can feel like pure chaos. But if you dig into the numbers, the technicals, they almost always tell a story. So today we're going to put on our detective hats and investigate a massive price collapse for Beyond Meat, using the data as our guide to figure out exactly what went down.
Okay, so this is our crime scene. A single-day drop of over 23%. I mean, that is an absolutely brutal decline. It wiped out nearly a quarter of the stock's value in just a few hours. This is the kind of move that sent some serious shockwaves through the market.
And get this, it was not a quiet fall. Over $800 million worth of shares changed hands on that one day. Now, to put that in perspective, that is way, way higher than its recent average. This wasn't some slow leak, This was a floodgate bursting open. It tells you the selling was intense and incredibly decisive.
So what is the story here? Was this just a bolt from the blue, totally unpredictable, or were there clues hiding in plain sight all along? Well, that's what we're here to find out. We are going to break down the technical indicators one by one and piece this whole puzzle together. First things first, we have to zoom out. Before we get into the nitty-gritty of that one terrible day, we need to understand the big picture. What was the environment like for Beyond Meat before this all happened?
And to get our bearings, we're going to start with one of the most fundamental tools out there, the moving average. Just think of it like this. It helps us see the underlying current of a river, ignoring all the little choppy waves on the surface. It just tells us which way the water is flowing.
And wow, the long-term view for Beyond Meat was not pretty. You can see the price here at $2.19 was stuck way below all of these key long-term averages. It doesn't matter if you look at the 100-day or the 200-day, the message is exactly the same. The stock was already caught in a powerful, well-established downtrend. And this number really drives the point home. Trading at less than a quarter of its 52-week high? That's just oof. It tells you the stock was already seriously out of favor with the market, sitting way closer to its yearly low than its high.
So, our initial investigation points to a really obvious suspect, this pre-existing dominant bearish trend. It kind of feels like that massive drop was just hitting the accelerator on a move that was already happening. So, case closed, right? Well, not so fast.
Because every good detective knows you have to look for contradictory evidence. So now, let's zoom in. We're going to shift from that big long-term trend to the short-term momentum, and we're going to search for any clues that might tell a different story. And this right here is the crucial question. If everything was looking so negative, were there any little sparks of life? Any hidden signs of strength that maybe, just maybe, a bounce was possible?
For this part of the investigation, we need a new set of tools, momentum indicators. So, if the moving averages tell us the direction of the trend, these indicators tell us about its speed and force. They help us spot when a trend might be getting exhausted.
And this is where the plot really thickens. The Stochar CI is low, which suggests the price is potentially oversold, kind of like a rubber band that's been stretched way too far. And even more interesting, the MACD indicator is showing a bullish crossover. Now that's a classic signal that often hints at a potential short-term pop.
So here's the central conflict for this stock, laid out right in front of us. On one side, you have the crushing weight of that long-term downtrend. But on the other, you've got these little glimmers of short-term bullish momentum that suggest a fight back might be brewing.
Okay, so we've got conflicting evidence on the table. How do we reach a verdict? And, maybe more importantly, what does all this mean for someone actually looking at this stock? Let's weigh all the clues and map out the potential paths forward. And here it is, the showdown. Side by side. The bullish case, it's all about those short-term momentum indicators hinting at a possible bounce. But the bearish case is just so powerful and simple. That devastating price drop, the fact it's trading below all the key averages, and negative volume confirming that sellers were in complete control.
Now, this battle's likely going to be fought over some very specific price levels. These are the battle lines right here. You've got a floor or support at 173 and a ceiling or resistance up at $3. Right now, the stock is basically trapped in between those two levels.
So this lays out a pretty clear strategy. For the bulls, the game is to see if the stock can bounce off that 173 floor. If it holds, then that $3 ceiling becomes the next target. But if that floor breaks, the bears take full control and the next stop could be much lower. And here's one final absolutely critical piece of evidence: volatility. A reading of nearly 40% is huge. It tells us this is an extremely high-risk, high-stakes environment. Whatever happens next is probably going to be a very sharp and very fast move. This is definitely a place for the bold, not for the faint of heart.
So, what's our final verdict? Well, the evidence points to a stock that's in a deep, powerful bear market, but it's also showing signs of being oversold and may be ready for a short-term bounce. So the ultimate question for anyone looking at this chart is pretty simple. Is this a classic bear market trap, or is it a turnaround opportunity in disguise? The technicals have given us the clues, but the market itself will write the final chapter.